This is Justin on Wednesday, October 12th, 2022, taking a look at SPX. So I'm zoomed out looking at Tuesday and Wednesday for one reason. Um, Today, we pretty much stayed in the lower range of this big bear move from yesterday. And so I came in here and I just drew a fib from the basically the high to the low. Um, I guess technically the real low is over here, but basically the high to the low of yesterday. And surprisingly, or maybe not so surprisingly, um, the the highs today ran right into the 50% area multiple times. Like these, they just tagged it. Then this got really close. And I mean, even look at this hammer right here, right off of the 382. Um, yeah. So, oh, and then we almost got that one too. That's close enough. Um, yeah, we're just staying bearish here. I'm gonna let's actually look at something real quick, and then I'm gonna take this off because there's one other thing I want to point out on here. Um, so if we go, we look at okay, how could you play that? If you noticed early on, hey, we're tracing this move like 50%, or not this move actually. Let me try something real quick. I am gonna change this. What percentage of a retracement? Yeah, even from there, it gets up to the 618. So you have, let me do this differently. You have a confluence of different areas. So you have the sell off from here down to here, and then you have the move from the high to the low of the day, and you have an overlap at 50% and 618, and it's just more ammunition to say, okay, here's a solid wall right here. I'm going to hold the cursor right here at the low. We did come back right up to retest that level with this wick and this wick. Um, so that's even more of, just adds more to the argument that, okay, this is the level to be at. Looks like if I hold the cursor at this mark, we kind of ran into that same price here and paused. Not that we knew that that was the price that would become 50%, but this was one of the following three patterns that we had yesterday. Anyway, from this area, we had a lot of resistance. So this is where you should short it. So how do you do that? What do you do to trade it that way? Obviously, looking at puts, you want to wait for it to push up into this area and then roll back down. But maybe you don't know that's the area the first time. Maybe this time, maybe this time, maybe over here. So let's go look at what's the puts doing around 9 o'clock, what are the puts doing around 11 o'clock, and what are the puts doing around 1:30. So we go to the 35.75 put at, so this was the first one that came down. This next one about 9 o'clock, that would have been buying the low price. So the low on this put was about 730. So buying that low, look at that, it came down to 740. So buying that same price, that would have been nice to buy again at 730 or around there, maybe 750. But these are pulling down a little further. These were the lower wicks that actually tagged. These lower wicks were the upper wicks hitting the 50% mark. RSI is real low, and then this candle looks like it was coming down further. So even just buying this level, this would have been buying. Oh, the lows on these are both 5, so that would have been setting in order to buy at 5. Waiting for the premium to be pulled out, and then it would have definitely filled if you had an order open because these lower wicks at 5 would have filled definitely in this candle 5 by 4. And then on the flip side, where do you get out of that? And I don't have a good answer to that because this looked like it was going to continue. These two candles were tiny. I was watching this. I'm like, that just like stopped. What is going on there? That we totally just stopped right here. I didn't see anything to the left that looked like we should. It kind of looked like, we were selling off a little bit. We had some indecision here. It kind of looked like that, just really a lot smaller, obviously. And I thought, okay, that bull candle, we did like a bull candle here, broke down, bull candle here, we're going to break down. No, we bounced there, came right back into the 50% on this one, the 382 on this one. So these fibs are totally guiding today. So that retracement and then rollover, and then this got into kind of the lows of, kind of the late morning time, or mid to late morning. So that would have been holding it would have been possibly holding this through a retracement. Um, let's see, maybe even just taking that back up to 7, buy at 5, get out at 7, just a really choppy day. Or if you're holding for more, we're not going to get back up into these highs, but this moved down from 7 to 5. Maybe this would move down. And I'm not timing this right to have an alarm go off. There we go. So this would have been, maybe like 13. Take away 2 down to 11. Did this get up to 11? Didn't quite get to 11. So I think as this kind of just paused up here, it would have been good to just get out at 10 or set a actually, yeah, you should have been out at 10 because there was an FOC announcement today at 1 p.m. Central. And so that moved things and the premium got sucked out and would have stopped you out if your stop was still way down here at 4. Good time to get out of there. And yeah, you can see the move we had up, then back. Even though it made a lower low on this candle than this candle, it really didn't help. This put didn't recover up to that same price. It didn't even get back up to 10 there. So a bunch of premium was sucked out here, and then obviously even more as the day went on, and we ended up closing out of the money on this option. So, and then calls, the same kind of thing. Like, let me take the fibs off at this point because, okay, if you can see where we had that 50% mark, we had a really nice kind of resistance here. This was more of like a channel, the top of a channel here. And then at first, early on, I had some angles like this. It's like, okay, this is looking good. We're gonna, we're going a little more bullish. It was a little steeper like this. And then I was connecting it like this too. It's like, okay, we're gonna see some sort of move. I thought we'd come back down here. And then I thought we would bounce. And then I thought there was a chance that we could just keep on going today, which we didn't. But this move where I had this line coming back down turned into, instead of a symmetric triangle, we had more of a rising triangle or increasing triangle. That broke down here, retested, then it broke down. It's like this one looks like, okay, it's going to go. No, that's the one that retested again, back to pretty much that same breakdown point. And then somehow it recovered, came back up to that high. And so it's like, okay, you take a step back and see that this is the top of the channel. Then here's some lows that we're holding. Just look to trade this as a channel. And so today was really very much a channel. The other thing, this is where I was going to say, okay, when we take the fibs off and just see how this worked out. Like, if there's a couple ways to look at this, but this looks like, hang on, a little better. This looks kind of like a cup sort of shape, like this, a really shallow cup. And then the next thing, so like a normal cup would be like this, and then a small handle like that, and then it usually goes. Same thing bullish, it would be like this, like that's the pattern, the cup and handle pattern. You could also say that, okay, this is a really deep, bigger cup, this is the handle, and then we should have broken down like that. That obviously didn't happen. That doesn't mean we're bullish by any means. It means that today was a really choppy, wait and see what's going to happen day. We had FOC here. We had some numbers come out pre-market, and then we've got some more numbers coming out tomorrow pre-market. And so I think there was a lot of waiting for these kinds of announcements to see how is this stuff going to move, what's going to happen next. And so really it comes down to what's going to be the number in the morning, where are we going to open in relation to that, and then trade it. We'll see what that actually turns into for trading that. I know I've got a bunch of crazy lines in here, but if you just focus on the candles, we've had 5 bear candles in a row. If we have any sort of gap up, not just above today, but really like today was an inside candle. So we need to get above both of these. We really need to get above the screen line. Even better would be to get above this resistance zone, because we could still just run up, bump our heads against that, and then roll back down. But if we have an open down here, we've got a lot more bearishness coming in. today's close actually closed below this one from the end of last month. So until then, until today, we've actually had closes that have been a little bit higher than this candle. This candle looked really bad. Obviously, you can go back and watch the video from that day. It's like, okay, this took out all these lows and we gapped down and all that stuff. Well, today was an inside candle. So we were waiting, we were resting, and then we could totally, like, this is a rest. Just like we rested here for like 4 days but didn't really move much. These 2 days are enough of a rest. It's like we could totally go down even more. If we gap down, maybe there'll be some bears getting out of positions, and we'll get bought back up a little bit and then roll over. I don't know what that's going to look like, but expect more bearishness if we're opening anywhere in this area. And then if somehow some strength comes in, we got to get through this resistance zone. And we could do another thing like this. We get some bull candles come in, we do some other kind of island reversal, or if somehow we were to gap up this high and turn this into an island reversal, that would trap a lot of bears. Really, it's just a matter of where we're going to open tomorrow. What is that going to show us, the strength or weakness of the market, and we'll trade it from there. So let's see, I didn't look at calls, but again, if you just look at this area when we're down here around 35.85, buying calls through there, the calls were losing value. This is the 36.25 call. This was losing value. So this is kind of the opposite I've talked about. Like, you could buy at 5, you could buy at 4, you could buy at 3, you could buy at 2. Like this one was stepping down, and each time it didn't rally, didn't go up as much. So this one turned into more of draw. So you kind of line these up. Say, okay, here's the lower lows and then steeper lower highs, and that looks like a wedge pattern, but it's also just the fact that the premium is getting sucked out of the option. But when you see something like this, you can see, okay, what is the stock doing, or in this case, what is SPX doing, that where are these angles lining up? And so sometimes I've drawn this across the charts where I've got some of these different angles, but zoom in on just today. I like having one candle from yesterday on one extra space for tomorrow. So you had, all through midday, you had just really relative relative lows early in the morning, and right at the end of the day, you took out those lows, and then the highs were all relative highs all day. And so you have just the calls losing this premium. The puts, they were not losing premium as quickly. At least this one, you could look at an option kind of that was right in the middle of the day, maybe like 35.90, 35.95. Look at those strikes to see, does the option move a little differently? How does it affect things when it's out of the money versus in the money for a call, and then in the money, out of the money for a put. But you can kind of tell that they're just losing premium all day for both of these, as we're just bouncing back and forth. It's just easier for the market makers to just suck it out and not push it back in as these are having those movements. So that's why right at the 1 o'clock, because you can see it in the chart of the options, this candle went strongly bullish, but the call didn't. The call actually closed as a bear candle, and the put closed as a big bear candle. And then the next candle, we did get some premium back in on the put, but we lost a lot more on the call. But we ended up staying pretty flat on the call because we did actually continue on up a bit, just to the point that we were going to roll over again. And then the put, that it just was losing value here. So, but when you have the same bear candle, not the same bear candle, but you have both bearish candles on two different opposing options, usually something odd is going on, or extra premium is getting sucked out because of that kind of event. So you can see it in the chart. Even though there's an event, you can see, okay, something bigger happened than just like that move. Like, this is announcement related, just like yesterday this was announcement related. Like something happened that move things more than just the chart would ebb and flow like normal. So um, anyway, we'll really see what things come down to for tomorrow. Hope this helps. Thanks.